Hey everybody, it's Alex here. Going to be recording the third and fourth video on the four trades. So originally I was going to do separate videos on support resistance holding and support resistance failing, but today I'm just going to combine them because they really go hand in hand, and I don't think there's going to be a need to do two separate videos. After I finish these four trades though, I will start doing some videos on actual setups on how to work these, because I understand just the concepts might not be enough to take you to that level where you trade them. Right? So without further ado, let's get started. And you might notice some overlap between support resistance, holding failing, and the other trades we've talked about with trend continuation and trend termination. So we've got Ethereum and the dollar, Ethereum USD pulled up here. If you guys look at this area, how would you classify this in terms of one of the four trades? And I guess it's not really fair I ask it like that, because I would not classify it as just one, because we've got in Ethereum USD a long-term uptrend and bull market, making massive higher highs, higher lows. And then we come in here and on higher time frames, we hold the support and we make a higher low. So I would classify this as both trend continuation, as the bull trend is continued from this, but also support holding, because support holds on higher time frames, holds cyclically as well. And that's what sends us to new highs. Now, knowing what support and resistance is will not necessarily solo help you in making these trades, right? Because if you're doing this on a smaller time frame, this is actually a failure test of this support level. All right, so we'll go to the daily to see what I'm talking about more here. But actually, one more thing to note is that I use this slowed stochastic to help define the rhythm and the trend, right? Highs with the highs, turning points with turning points, turning points with turning points, right? And this is a big turn down right here, big turn up in this region, right? And you can't see it right now, but all of this was a big turning point as well. So I will be using this stochastic to represent our cycle, and it's our time component of trading. All right, so let's back it up to where we were. Oh, sorry about that. Well, my laptop still, guys, so it's kind of a mess. The next video should be on my desktop. It should be a lot smoother. All right. So here we can better see what I'm talking about. So a lot of your support resistance trades are going to be failed trades, because if you're entering into quote potential support rather, you're most likely not the only one, right? We can see this is a very obvious support zone on the chart, given what it led to, a huge fake out high with a lot of strength. So it's likely you're not going to be the only one with buys there. And it's also likely there are a lot of stops right beyond it that can add a lot of liquidity. It can be very volatile, and it can also offer the best risk reward points. But finding the zone where support gets tested, holds perfectly, and then goes to new highs is actually pretty low risk reward profile, because that's not going to happen that often. It's going to be a lot more often that you have these stop runs or stop tests, whatever you want to call them. But it doesn't mean we can't trade around them, right? And the fact of the matter is, if this is support, then the best place to long is going to be in this area, right? Making sense? As opposed to, the other side of support resistance trading would be not trading the support, but trading the resistance. And if we look where you would have really had an ideal entry here is after you stop breaking, or after you stop making lower highs and you're making higher highs, because that's when the resistance is really broken. We're following along what I'm talking about here, right? Buying into support is one way to do it, and buying resistance turn support is another way to do it. All right. So we got our lower highs, lower highs, lower highs, all throughout here, lower highs, right? Lower high. Also, lower lows, attempted support, and nope, just lower lows, last attempted support, and honestly, a very good place to have bought. And if I had bought here, I would have gotten stopped out right away for a small loss. And if you're buying into support zones where there's likely to be a lot of volatility, you got to use a tight stop, because even if that's the zone where you're going to bounce and you just get stopped out, like in this case, what are the two options here? A, it literally just goes straight up and you have no way to get back in. That's one option. Or this was the bottom. This was a stop test where original support actually holds on higher time frames. And then you have an opportunity to buy into that support again. Right? So that's one way you could have played that, lining it up with your cycle as well. Right? You'd be stopping out on the low cyclically, but cyclically a market can also stay there for an extended period of time. All right, like how price goes down here, even though we have multiple cycles inside of it. So waiting for one leg up and then buying that next pullback is totally fine. There's nothing wrong with, even though your support entry failed, right? You get stopped out here, you have another chance to do this with this almost same risk reward profile as here. And you can even go into it. I like to use Fibonacci's and start buying halfway back the potential pullback, right? So if we've defined this as a potential bottom, I want to do a Fibonacci from the bottom to the top of that move. We'll zoom in a little bit here just to help out. All right, and about halfway down, right about there is where I would have started to buy. And then the other two fib levels that I look at are the 618 and the 786. So buying all into there with a stop below your major pivot. That is how I would rather play this, and how the safe trader plays this, as opposed to, nibbling here, buying here, buying here, buying here, not stopping out in front of this, just buying more, buying more, buying more, buying more. And then for all you know, by the time you even get down here, you don't have money to buy this opportunity. You bought too much up here and now you missed 30, 40% drop. And then even if you miss buying this, you can still get pretty good opportunities. And then the flip side of that is not buying new lows at all and just waiting for your lower highs to get broken, which happens right here. And you can see these daily waveform bands curl around and flip bullish through here. So if you just don't want to be risking the capital buying new lows, you can wait. And instead of trying to buy into support zones where the market's trying to accumulate, you can buy after the breakout and the retest, right? Lower highs, lower highs. This was a lower high as well, potentially, until we held this pullback, had a bullish engulfing here, and then another bullish engulfing to break us out. So at this point, if you hadn't been entering down the support, your next best opportunity is into this old resistance. And the same way we use fibs from the bottom, you can use a fib from the pullback. Start buying back halfway at the 8, start buying at the 618, start buying at the 786. Stop below your major pivot. That's how I work it. And you know, you gotta. It's all about position size here too, right? Because it doesn't mean I can just buy, you know, half my size here, half my size here, and half my size here, and stop below here. Right? If my average is here, and I stop out, that's a 27% loss on all my size. That's a quarter of my position. So, you know, if you're not buying into very tight levels where you can just put a nice stop beneath it, then you got to watch your size, right? You know, one way you could play this is only using a fifth of your capital for this whole pullback, especially because your cycle is not very low. You're still, you know, it's not like it was back down here, right? It's a little more uncertain. So maybe you only use half your size. So if you bought into here, you know, I said half your size. I'm in a fifth. Sorry. If you bought into here, and into here, maybe your average entry is at the 618, and you're willing to lose 5% a trade, right? You know, and that's for you to choose your own risk level. Well, if your stop is right below this pullback pivot, that's a 25% loss on a fifth of your position. There's your 5% loss, or your 5% risk, however you want to call it. A loss if it hits and you get stopped out, right? If you had a fifth of your total size in at this point and it goes and runs your stop, or the trend fails to continue, then that's your risk. You got to know that from the start. But you guys following here? All right. Support after you break out of resistance. That's one way to enter, or buying into support. And if you want to keep on, you know, you can keep on even higher time frames if you like. You don't have to enter in the daily, right? Because this holds as support on a higher time frame. Right? Enter the pullback, wait for the close on this bullish engulfing with a cyclical cross. I mean, this was a setup of a lifetime right there. So you either enter there on the bullish engulfing, or, you know, you can wait until your higher time frame has turned around. You know, your waveform bands are all still bullish. You're back above holding the 8. And you can wait until a breakout above major resistance, right? And then enter. This is the breakout. And then enter on the retest of this zone. Now, the person who enters here does not have as good risk reward as the person who enters here in this area, right? They can enter here and have their stop below the pullback, as opposed to if you enter here, you know, your best bet is entering with a stop below your entry. But, you know, if we go look at the daily, sorry guys, my laptop's slow. Trying not to make this too much longer. It's gonna be like a double video though, because it's support, resistance, holding, and failing. So it's gonna be a little long. But stick with me, fellas and gals. All right, so the person entering the pullback, they know they've got their fib levels on this pullback. This is their wall where the bulls need to hold, and they can have their stop below. And then depending on how much they risk of their position, of their total position in here, they can very easily define that. Whereas if I'm entering a breakout of this zone, right, cyclically, we're already pretty extended. Right, this is the point where a breakout trader watches for the breakout, buys the pullback. But cyclically, you're much higher risk than buying down here, right, and into support. Or even in here, when you broke out of resistance here and retested it, right? Even more so on the weekly cycle. If we look at the weekly cycle, it looks something like this. Right? So when you're buying a major breakout and retest of old resistance to be turned support, like, right, cyclically on higher time frames, you're pretty extended. Cyclically on intermediate term time frame, you're pretty extended. It's just higher risk than buying into here, so you got to have that as part of your trading plan. And if you're entering here, you got to watch your size. You know, if you're using tight stops and you enter here, maybe you get stopped out here. Maybe you get stopped out here if you buy, right? And that's one reason we really like using these wave formation EMA bands, because often the trends will hold right at the bottom or at this purple, the 30. And now this would have been just like this on higher time frames. This would have been a trend continuation play as well as support resistance holding. Guys following along? Also, do note this could have been a failed breakout. All right, you guys following along there too? All right, this was the all-time high from the big run up. And then this was a failure test. A failure test of this high. We broke out, failed it, got very high volatility. It brought us right back down, and then got rejected at the original high. Does that look familiar? Does that look pretty familiar here, right? Support, break your support. Volatility comes in, you whip back up, you pull back, you hold support, and you move up. Just like you have resistance, you break above it, you have volatility come in, you quickly pull below it, below it. You fail at the old resistance, not once, but twice, and then you make another lower high. I mean, it was pretty obvious that this trend was ending. At least short term, right? So over here, this could have been just like this, where volatility comes in, whips us back down to this area, and that was the end of the trend. But we very quickly, the moment we were below this resistance level again, we wicked right back up, and it was support. So even if you weren't buying this pullback, you could definitely buy a breakout above this all-time high. Cyclically, you know, it's a lot riskier than having bought down here. But if you're a breakout trader and you're trying to trade breakouts of resistance, that's where you're going to be positioning yourself. If you're not looking at smaller time frames where you could be doing it previously. How I would play it, I like to buy into support, but it stopped out below this probably. Bought this pullback with a stop below the major pivot. And then when that works for me, maybe I had like a fifth of my size in total. Now this resistance is where I want to buy again. So I'm buying throughout here. Maybe another fifth or 2/5 of my size. And then all throughout the bands here, making trend continuation plays, right? Watching your cycle crosses, buying when that happens. Buying on these bullish engulfing candles. Cyclical cross, boom. Higher lows in price, higher lows on the stochastic. You just had a really nice rhythm going here. So those are the opportunities to have bought if you missed the support resistance play. Or you're waiting for the next major resistance, a breakout and retest. All right, you guys following? And then you're just taking profits in the new highs, Not even one chance to come back and test that high. Nope, you held right at the daily 30, which cyclically, right, you got a nice cycle cross up here in the bull market. And then you do have the bullish engulfing candle right here with that cycle cross. That'd be another nice place to add some size. Although we have to keep in mind on higher time frames, cyclically, where I'm saying you could be buying and adding more was like in here. Cyclically, you're pretty overbought. Like it's a lot more high risk than the guy who bought this first pullback into support back here. Right? And then you do get another massive leg out of it. And on smaller time frames, there was one more opportunity to have bought, like support resistance wise. All right, so breakout from this level, boom, retest. Breakout from this level, boom, retest. Breakout from this level, boom, retest. And then failure. Right? On at least on this daily time frame, right? It fails. So this is where a breakout trader would probably stop out of that trade, like for a good amount, if you're using the daily time frame. If you're just using the weekly, then I'm sure this. Actually, no. Even on the weekly, you get a full close below the 8. So let's go through this like one more time. How this trade would have worked. Either you bought into support, potentially got stopped out on the daily, and bought the next pullback, or you waited for the breakout above the lower high here, and you bought that resistance turn support, or you waited for major resistance to be broken, and then you bought that pullback. But we know the risk is much higher there cyclically, right? It does tend to be where a lot of the biggest moves come from, but cyclically, much higher risk. That's why you'll find me buying into potential support. Good profit taking zones though, and resistance. Good profit taking. You guys feel like you're following along here? And again, I'll be giving a lot more full-on trading examples in the future, so definitely stay tuned for those. We can even talk about more recent events here. Another great example of old all-time high, boom, resistance, breakout, retest, continuation. It's beautiful. And not only that, but you have resistance here, and it depends on how you get to that resistance. Right here, we're making higher lows into resistance. That's bullish. And here, coming into support, we're making lower highs, which is probably why on this candle, if you had entered here and didn't take any profits or still had something left, that's where you would have stopped out. And then re-enter. If you're a support trader, re-enter at your major pivots. Right? And so if on a lower time frame, you were entering on this pivot and you get stopped out, well, this would be a good time to re-enter with a daily cycle low crossing up, a really nice bullish candle breaking out, swing line setup, bullish engulfing, whatever you want to call it. If you entered here at potential support and got stopped out, you can re-enter now with a stop below this candle. And so it's not that big a deal that your last trade failed. You got stopped out for your small percentage, and now you can re-enter and make that back on the major move up. Cyclically, weekly, and daily cycle are very low, so the risk reward cyclically is great right now. Right? And could we come down and make it another low? Absolutely. So that's the level where I'd be entering with support resistance. Stop below. Right? And then you're taking profits short term into any resistance until, like we saw back in, what was it, 2015, 2016, until this goes and has a nice move up. And then a pullback, that's the pullback you want to be buying. Right? You know, using the fib, maybe we stop out like at the bands here. So I'd have a fib and start buying halfway back, 0.618, 0.786. Stop below my entry. That's how I would trade that. That's how I will be trading that actually. You know, this week I'll be buying this pullback, absolutely. All right, guys, I hope that this video was really helpful. I hope you guys feel like you learned something today. Feel free to post comments below. And I'll be making some more of these as the weeks go on. Thanks for watching, y'all.